We are in conversation with Sharad Saxena, Chief Technology Officer at Bank of Baroda, in this special coverage on the sidelines of 13th edition of Mint Annual Banking Conclave. Thank you so much for
Thank
speaking
you.
to us. The first question that I would like to take from you is, how does revolutionizing technology in the banking sector help India achieve its goal of $5 trillion economy faster? What is your sense there?
I think everything we do is towards making the economy bigger, and that is what the banks are there for. And the use of technology to enable this in an accelerated manner will definitely help India achieve the target of 5 trillion economy. Having said that, at a larger level, I think at the grassroots level, what we have to do with respect to technology, one is the outreach to the unbanked. I think that is the one very important factor. And we have to devise more and more means. Already there are uh, models available by which we reach out to the unbanked, but more models have to be evolved in terms of outreach, in terms of tailoring specific products for those customers. So that is one part. Second, and another, I wouldn't put it as a second, but that's also almost at the same level of importance, is to manage the risk. As we have seen in the past, the banks have been plagued with numerous risks of defaults, bad loans, which have really caused havoc with the industry. In order to contain those, in order to give credit to those which are worthy of credit and will get our money back, a lot of technology input can help in terms of, if you look at the retail, in segmenting the customers, seeing the customers' behavior, looking at the environment, taking collateral data, taking other data from various bureaus which have data not only of what money they have taken as loans, but of many other data elements which are there. If you move higher up the ladder in terms of SMEs and large corporates, there's huge amount of external information which can be collected. There is huge amount of modeling can be done, and we can contain the risks over there. Apart from that, the risks which are inherent to the bank in terms of liquidity risk, in terms of other types of risks which are there, all those, there is a huge input of technology which can be put to make it better.
Absolutely. And talking about Bank of Baroda itself, if you could cite some examples of, some of the digital products that the bank has offered that today makes the customers' lives easier or helps you reach this underserved market that you were talking about.
From the bank's perspective, whatever I talked about earlier, we are doing in that direction. We are taking baby steps. For example, we want to have a greater share of wallet of the customer, to give more products to the customer. So we are building models to see that what is the propensity of a customer, existing customer, to be buying another product. What type of customers are going in for that? So we are building models, we are taking cuts, and we are doing a very segmented marketing to those customers, and are seeing results very positively, instead of mass marketing, advertising, and seeing and waiting for the customers to come and take those products. In terms of risk management, whatever I said earlier, we are building early warning system model, where we collect a lot of information, both internal and external, and trying to build a model to say that if that can predict to a certain degree if a customer is going to default. We are also working on trade finance area, where scrutiny of documents is a very specialized area, where it is very difficult to get those skill sets. And again, be assured that 100% of scrutiny has been done. We are trying to build AI models over that to be able to go into the documents, see discrepancy with respect to regulations, with respect to other parts of the documents, and come out with discrepancy which can be avoided in the contract.
That's quite interesting. In fact, my next question was to do with the new technologies that are now coming up, and there has been word on how cloud-based systems or blockchain should be implemented in the context of banking to make it easier to spot frauds or to spot NPA cycles. But why has it been so difficult to share data for banks? What are some of the challenges that you face so far in implementing those new age technologies?
See, I have a, if you look at blockchain, then blockchain, though technology is great, it has not picked up for numerous reasons. One of them has been that there is no ecosystem around it. It has to have a platform approach where everybody goes and does the business, and thereby, as you alluded, sharing the data. That has not happened, and that is why, despite the technology being great, it has not picked up. Same is with respect to cloud. Cloud, in my view, is a good infrastructure available for doing two things. One, to increase the agility, and two, to do innovation. The third one, which is being very much talked about, is cost, and I don't agree with that. The cost is one of the factors because of which one should go to the cloud, though it may be good for smaller startups because they don't want to spend so much on infrastructure. But for an organization like ours, cost is not a factor which is to be considered for going to the cloud. Now, coming to the third part, why data is not being shared. I don't think it's a technology issue, but there is a huge reason for the banks to share data, to build collective models, to do analytics with data and from various entities put together to be able to spot early on the delinquent or near delinquent cases and go after them.
Thank you so much, Mr. Saxena, for speaking to Mint. For more, please stay tuned in because we have many more interviews lined up.